past 2 years, artificial intelligence has been the hottest investment story in the world. AI companies have added trillions of dollars to the stock market. Investors are pouring money into anything related to artificial intelligence. But recently, a new question has started to appear in financial markets. What if this is another bubble? Because history shows that when a revolutionary technology appears, markets often get too excited too fast. And sometimes, that excitement ends painfully. So today, let's look at something investors are quietly asking right now. Is the AI boom sustainable? Or are we watching the early stages of another tech bubble? To understand the fear, we first need to understand why AI stocks exploded in the first place. Artificial intelligence is not just another tech trend. It has the potential to change entire industries. Companies are already using AI to write software, analyze data, design products, automate tasks, and even create content. That means businesses can potentially become much more productive. And when productivity increases, profits can grow dramatically. Investors know this. That's why companies involved in AI, infrastructure like chip manufacturer RS, cloud computing providers, and the data center companies have seen their stock prices skyrocket. Some stocks in the AI sector have increased hundreds of percent in just a short time. For many investors, AI looks like the next technological revolution. But rapid price increases always raise an important question. Are investors buying the future, or are they simply chasing hype? This is not the first time markets have experienced this kind of excitement. In the late 1990s, investors discovered a new technology that was going to change the world: the internet. At the time, people believed the internet would transform business, communication, and commerce. And they were right. But investors became so excited that they started buying almost any company connected to the internet, regardless of whether those companies were profitable. Stock prices exploded. Companies with no revenue were worth billions. Investors believed they were witnessing the birth of the future. And in many ways, they were. But the problem was valuation. By the year 2000, many internet companies were priced based on dreams rather than reality. Eventually, the market corrected. The result was the famous dot-com crash. Technology did change the world, but many of the companies investors bet on disappeared. This is why experienced investors always become cautious when they see a new technology, combined with extreme market enthusiasm. Today, some analysts believe parts of the AI market may be showing similar signs. The main concern is not that AI is useless. Most experts agree AI will transform the economy. The concern is how fast investors are pricing that future into today's stock prices. For example, companies are spending tens of billions of dollars building AI infrastructure. Tech giants are racing to build massive data centers. Chip demand has exploded. Cloud providers are investing enormous amounts of capital to support AI computing. But these investments raise an important question. Will the profits generated by AI eventually justify these massive costs? Right now, many companies are spending huge amounts of money before the long-term business models are fully proven. That uncertainty is what makes some investors nervous. However, many analysts believe comparing AI to the dot-com bubble may be misleading, because today's largest AI companies are very quick found. Different from the startups of the 1990s, the biggest players on AI today are some of the most profitable companies in the world. These companies already generate billions in revenue. They also control the infrastructure needed to develop and deploy artificial intelligence. That means they have the resources to continue investing in AI for years. Another important difference is that AI technology is already being used in real business applications. Companies are integrating AI tools into customer service, marketing research, and software development. In other words, this is not just an idea anymore. AI is already becoming part of the global economy. This is why many investors believe the AI boom could continue for a long time.
So if AI is real and powerful, what exactly should investors be worried about? The biggest risk is expectations. When expectations become too optimistic, Even great technologies can disappoint investors. For example, if markets expect AI profits to grow extremely fast, companies must deliver results quickly. If revenue growth slows, or if AI adoption takes longer than expected, stock prices can correct sharply. Markets do not just react to reality. They react to whether reality matches expectations. That is the key risk investors are watching today. So is the AI bubble about to burst? The home street answer is that no one knows for sure. Artificial intelligence could become one of the most powerful technologies ever created. But financial history teaches an important lesson. Every technological revolution attracts excitement, speculation, and sometimes overvaluation. The internet changed the world, but the companies that ultimately dominated the internet were not always the ones investors originally expected. The same could happen with AI. Some companies will lie, become incredibly valuable. Others may disappear. And for investors, the challenge is separating real long-term winners from short-term hype. Because in markets, the most dangerous moment is often when everyone believes the future is guaranteed.